Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about why I believe we could see a short-term correction in the greater equity markets, but more importantly, how I'm personally choosing to defend and or hedge my portfolio in the case that we do happen to see said correction. As many of you guys know, today was a rough one in the markets. It was a pretty bloody day across the board, and days like today do suck, you guys. They sting, but that is the game we're playing. And as I've said many times before, it's far more important, at least I believe it's far more important, to cover the red days, to talk to you guys about the bad times, because ultimately that's what will build character as a trader, and that's what will benefit you in the long run in this game we're playing. All right, so let's get into it. As always, we'll quickly go over each topic we're going to be discussing, and then we'll dive into each one individually. In front of us, of course, TradingView, where we will cover the following names today in this order going down the watch list. So there are 5 tickers here, but I'm only going to be covering 3 of them. We're only going to be looking at 3 charts today because those are the hedge plays that I'm going to be talking about. The first is XPXL. This is a 3x bull ETF of the S&P 500. And of course, if I do think the S&P 500 is going to decline in value, I'm going to want to play the 3x bull ETF. Okay, so a note right off the bat, you guys. SPXL and VIXI are ETFs, and I just want to say right off the bat that ETFs a lot of the time are more likely to decline in value as opposed to appreciate in value when the proper fundamental macroeconomic environment is there. Okay, so SPXL is the play I'm choosing to short and take out put options on, which is short, same thing, for this decline that I believe will happen in the equity markets, at least as a hedge position. Again, you guys, these are hedge positions. This is to defend my portfolio. A lot of the stocks we talk about on this channel, I remain bullish on for the long term, but that doesn't mean that things aren't currently looking a little overextended in my eyes. And again, I'm trying to capitalize on this opportunity. There's ways to make money while the market declines in value, and these are a couple of them. Okay, so the first, again, straight up, put options on XPXL, the S&P 500 bull ETF. The second is the VIXI. So this is an ETF that touches on the VIX, which is a CBOE volatility index. The VIX is inversely correlated to the S&P 500 directly. Okay, so if the S&P 500 declines in value, that means the VIX will go up. So it's a volatility index, again, you guys. And it's the way I choose to play that personally. You can't just trade the VIX. You can't trade options contracts specifically on the VIX, which is what I trade. I choose to play the VIXI, all right, which again, it's just an ETF following the VIX. Okay, pretty much keeping in line with the VIX. All right, so well, to the second chart, the second direct hedge, and the only second direct hedge, because silver is not a direct hedge, but I'm very bullish on it at the moment. I'll talk about that at the end. Again, we'll cover VIXI. VIXI and SPXL are the 2 direct hedges. So these are calls on the VIXI or long VIXI, short or puts on the SPXL. And then lastly, silver, as I'm recording this video, is looking so strong. If you guys watched the video I posted yesterday, very, very bullish on silver. There's so many stars aligning for silver in my eyes at this point in time. So we'll close it out with silver, very bullish on silver, and obviously long silver, calls on silver. Okay, so before we dive into the charts, though, I do want to read for you guys the intro to this morning's newsletter that I sent out to the portfolio newsletter group. And again, I write these at the time. Today was a very bad day for me personally. If you guys are following along, you guys would know that I got pretty beat up today. And again, it's important to stay cool, stay rational, and keep a level head when there's obviously so much emotion in the market. And we'll get into that a little bit here. So I do want to set kind of the fundamental ground layer and just set the precedent for this video and just give you guys some of my thoughts, and then actually expand on some of my thoughts that I mentioned in here, and just let you guys know how I was thinking earlier today during all the madness, during the hectic times. And of course, I do have to write this at the same time as I'm trading, so it does get a little hectic, but let's read through this first and then we'll dive into the charts after. All right, so it is a bloody day in the market, team. We're seeing right across the entire board today. It's evident that all asset classes were feeling overextended and that it was time for a correction. I'm preparing for more potential downside in the greater markets, but I also wouldn't be surprised if we see somewhat of a dead cat bounce tomorrow in some of our more risk-on assets. So when I say risk on, again, you guys, we cover revolutionary sectors here a lot on the channel: cryptocurrency, biotechs, EVs, etc. And these are considered to be risk-on assets. These are very retail-friendly assets. A lot of people, especially new money in this market, because we've seen so much retail flow into the market over the past year, are going to be gravitating towards these stocks, which also means that these stocks are going to be highly volatile. They're going to be significantly more volatile than like blue chips and stuff, okay? So tomorrow, if we're talking about like crypto-related stocks and some of EV stocks and whatnot, because we had 2 days in a row of decline, Monday, Tuesday decline. Again, we kicked off the week with negative sentiment. It did make sense to me, and I did mention this in the silver video, that we probably continue that over the course of the week. But Maybe Wednesday, Thursday, we see a little bounce, see some green, see some money flood back into some of these at-risk on assets. But I will say right now that I do believe that Friday we'll probably close out the week in the red. That's just what I'm thinking. Again, of course, that goes with my negative sentiment around the greater equity markets. Okay, so days like today do hurt, and they can definitely take a toll on your confidence as a trader. It's important to understand that the markets will forever and always work in cycles. Nothing goes up forever, just as nothing goes down forever. Yin and yang, day and night, you guys know the deal there. Like life, the market works in cycles, okay? So it's okay. Been in this game a long time. I've seen a lot of red days. Today was one of my worst, to be honest, but that's just a matter from a financial perspective, not a percentage perspective necessarily, but obviously you're scaling up, and if you're so fortunate like we've been lately to reap a lot of the benefits from many of these bull markets that we've been experiencing. Again, nothing goes up forever, you guys. That's not how the market works. Even with all the capital inflow, even with all the money printing going on right now by governments across the world, nothing will still go up forever, okay? And I will talk about the stimulus a little later because that's an obvious catalyst. But again, I do think that ultimately things are overextended, and again, corrections are a healthy part of every bull market, okay? So do your best to push emotion to the side, stay rational, and keep your eyes on the prize. So again, you guys, there's a lot of emotion in the market right now. Do your best to keep a level head, stay cool, stay composed, because ultimately those who act rationally will outperform those who act out of emotion, okay? Adapt or get slapped, all right? So adapt or get slapped, you guys. I remember seeing a comment from one of you guys one day, and it came to mind, and I 100% agree with it. It's also crucial to have community at times like these. Celebrate on the good days, and be there for each other on the bad days. It makes losing hurt a whole lot less when your peers are losing as well. That's why I'm so thankful that we have a great team in the Waves family on days like today. So even in the Discord, as I was just talking to some of you guys before I recorded this video, shout out to all of you. I saw some of you play this well. And again, you guys, the Discord, the portfolio, we're all interested in similar things, but that doesn't mean we're all trading. And I never want you guys to copy me. I never want you guys to trade exactly what I'm trading. I truly don't want that. Because again, I lost a lot of money today, and some of you guys made money, and that's awesome. But a lot of us, because we're interested in the same asset classes, some of the same stocks and whatnot, it's completely reasonable to assume that many people lost money. And at times like these, community is so important. Again, you guys, even on the good days, I say the same thing. Like, community is so important. Like the connections you have to those who are playing the same game as you, to those who really get you on the good days and bad days. It's just important, especially on the bad days, again, to be there for each other, to throw some hugs around and just comfort each other. So if you're in the Discord, if you're in the comment section down below, please be nice to each other, because a lot of people got smoked today, okay? So just keep that in mind, you guys. But again, community is so important. Like, the money becomes just a number at some point. Community is really what sticks around, and that's like the lasting factor in this game. That's what makes it fun. It's not the money necessarily. It's the community and the fact that you get to share the gains with other people. As I said yesterday, I'm playing defensive offense in a sense. So defensive offense, again, I am taking out these positions that we're going to go into in the charts because I want to profit off of the red. Again, if you take out the proper calls and take out the proper put positions, then you can profit when the market falls in value, okay? If we do happen to see further downside in the markets, there are always ways to capitalize on that, like VIXI calls and SPXL puts, which we will get into. Again, we'll hop into the charts right after this. I'm still bullish on many of the plays that we've been covering. I've restructured my portfolio today to reflect that sentiment, but I've taken on more responsible, more medium-term positions. I'm not exactly sure how long this correction will span, but I'm doing my best to be prepared for both sides of the coin flip. All right, and then just go into what we talked about below, right? So anyway, again, you guys, right now I'm in a sense of defensive offense. Over the past few months, I've been in massive offense because the charts have been very clear. The sentiment has been very clear to me. But now that we are feeling very toppy, short term at least, I don't think the party's over, especially for like cryptocurrencies, Bitcoin. The 2021 bull market is definitely not over in my opinion, but that doesn't mean that we aren't feeling toppy short term. And again, I do believe that we will see a further correction in the short term. All right, of course we will continue we will assume the existing long-term rally, but again, short-term, I do remain bearish on many sectors right now. The greater equity markets, again, as I said, okay? So I'm doing my best to prepare, and that's what we're getting to right now is exactly how I'm doing that. But before we do, as always, you guys, if you want one of those bad boys in your email inbox every day, check out my complete portfolio daily newsletter, first link down in the description below. Along with one of these in your inbox every morning, I do update my complete portfolio, explaining my thoughts, talking about my trades, going over what I traded that day. And again, you you guys, complete breakdown of my entire portfolio, call options, put options, stock positions, cryptocurrencies. And again, in the newsletter, I do send out intros like that occasionally, and do talk about the trades I made with some charts, analyses, and just whatever I think is important to share with you guys at the time of actual trading. All right, so $15 a month if you're interested. I really appreciate it if you do, but if not, no worries. And of course, please, if you're trading any of these, if you're worried about the situation of the greater equity markets, please give the video a like down below. Subscribe to the channel if you're new around here. Again, you guys, most of the time it's all good. It's all green. It's fun because we're involved in so many exciting sectors. But again, that's just the balance. That's the balance of the markets. It'll forever and always be this way. So the red days, all right, just accept them and learn from them. All right, so let's get into these charts. So directly on shares, ETF Trust, directly on, that's such a long name, but SPXL, again, you guys, this is a 3x bull ETF of the S&P 500, all right? And again, the S&P does outperform this slightly, but that's because it's a 3x. So it's a more volatile version of the S&P, which is why I choose to short this over something like the SPY, all right? So the SPY, if you're not trying to play the 3x, is objectively a safer play, but I'm trading. I'm making the trades, and I choose to play the 3x bull ETF in the SPXL, all right? So SPXL, just to keep it short, again, you guys, I do think it's very likely just because we look so overextended right now. And as I said in the beginning, ETFs are more likely to decline in value than they are to, so they're degrading. Like ETFs over time ultimately degrade, especially if you're working with the VIXI and the SPXL. Over time, they do degrade, and we'll kind of see that in the VIXI, but I'll talk to you guys about why I think the VIXI will ultimately appreciate in value. SPXL, though, again, took out a put position, and I'm prepared for this fallback. So to keep it simple, you guys, my price target for the SPXL specifically, and keep in mind the SPY, the SPX are going to look pretty similar, but again, the SPXL is just a more volatile version. SPXL, my bottom side price target is to test the overall line of support on the long-term uptrend. Okay, so since these March lows, again, since the liquidity crisis, when the SPXL came all the way down to $60, it's seen a rally because we've had so much new capital into the markets, money printing, etc., asset inflation, and we've seen this rally. It only makes sense to me that we'll ultimately test the bottom side of this long-term uptrend, and that would take us down to, if we hit it by, say, March 10th, just where I happen to draw the price target. Again, it's all dependent on when the SPXL chooses to hit this downside price target. My price target is going to be about $63, okay? And this is a pretty steep line, so it's very dependent on when we strike it, but I think this will happen sooner than later. Again, you guys, sentiment has been so strong for a fairly long time now, and I think it's about time we see a fairly significant correction like we did back here, all right? So I wouldn't be surprised at all if we see something like we did back here play out at the end of summer, and that's why this is my price target, okay? So again, put options on the SPXL because I believe the S&P 500 ultimately will decline in value, and my price target for that is to test the overall line of support on the long-term uptrend. And again, after this, we'll likely continue just because money's still being printed, assets are still being inflated. The fundamentals have not changed, but the technicals have changed, and they've flipped bearish in my eyes. Okay, so bearish on SPXL. That's why I'm taking put options positions, put contracts out on the SPXL personally. Move on, VIXI, the ProShares Trust 2 VIX short-term futures ETF USD. So VIXI is, simply, I think the VIXI, when the VIXI moves, you guys, so this was the VIXI back in March. Let's expand a little bit. So you can see the VIXI was at similar levels that we're at right now before the March liquidity crisis that we saw just about a year ago, okay? And that's an interesting thought too, is the fact that that liquidity crisis was almost exactly a year ago as I'm recording this video, okay? So keep that in mind as well, but you can see how volatile the VIXI can get when the equity markets get volatile, okay? So this was back in March. This was during the liquidity crisis. When we see sharp corrections, again, that's what volatility is sharp moves either to the upside or downside. So volatility doesn't actually need to mean to the downside. It can be both ways. But the VIX, if the S&P goes down because it is inversely correlated to the S&P 500, the VIX will go up when the S&P goes down. And the sharper the S&P declines, the significantly sharper the VIX will appreciate in value, okay? So VIXI, again, went from $12 at the beginning of the liquidity crisis to a high of almost $65 when we were at those March lows in the equity markets. And since then, it's been declined down, obviously, because the S&P is going up, okay? And actually, one more thing I want to mention here that's important to take a look at is that we are seeing massive bearish divergence in the S&P 500, and that's something that I needed to go back and talk to you guys about because that's very important. So bearish divergence on volume. Bearish divergence on volume is where the price per share is appreciating value, but the volume is declining significantly. Okay, so you can see again, this is like a textbook. This is trailing down. These are all these green and red bars right here. That is a volume. You're seeing that go down as the price is appreciating value. Okay, so this is going up, this is going down. So that is bearish divergence. That is a bearish signal from a technical perspective. All right, and the VIX is kind of seeing the opposite of that. Okay, so if you zoom in here, we're actually seeing volume start to pick up a little more. We're seeing some spikes in volume here, and that's really what I like to see. On top of that, from a macro perspective, the VIX, VIXI specifically, I'm sorry, so VIX and VIXI are going to be a little different again, because ETFs do ultimately decline in value. You can see the VIX was down 1.5%, the VIXI was down 4%, but it is up like a 1.5% in after hours. So that makes me very confident in how this will perform if we do happen to see a decline in the equity markets again, like I've been saying. So again, VIXI has broken a pretty long-term line of resistance on the overall downtrend. So using this high here, this high here, this high here, so multiple touch points here, beginning way back in June, so midsummer. We've had 3 touch points here, and VIXI actually, with this recent move up at the end of January of this year, did technically break out of that long-term line of resistance. Okay, so we are kind of dancing on, again, previous resistance will act as a new support. It hasn't quite used this line to a T yet, so maybe we come down a little more. I think that's pretty unlikely, just because you're seeing some volume come back, you're seeing some excitement. The stochastic RSI is curling to the upside. That's always bullish, especially on a daily pattern from a swing trading kind of more medium-term perspective. So that's bullish. Volume is bullish. The breakout is bullish. And ultimately, just kind of my general price target for the VIXI is going to be this area around here, because it's acted as such a significant ceiling and floor, or area of support and resistance over the course of the run up and primarily the bounce down. Okay, so just conservative again is a $30 price target over the course. Again, this is all assuming that the S&P and equity markets do continue to fall. If this doesn't happen, the VIX is going to fall off a cliff. But if the S&P does correct, like I believe it will, I think we could, and I do think it'll happen fast, just because again, there's so much emotion, so much new money in these markets. And again, diamond hands is a great meme, but when push comes to shove, not many of these new traders are going to have diamond hands. All right, so again, my price target for the VIX, just a nice psychological even. It acted as a significant ceiling and floor back in back in the great crisis of 2020. Just over the course of the bull market in equities, over the course of 2020 would be a $30 price target. Okay, so again, shorts or put options on the SPXL and call options, and I'm long on VIXI. All right, at this moment. And again, keep in mind, you guys, this is just my opinion, but always know that I have money on what I'm saying. So, yeah, keep that in mind. Close it out with silver, which I'm so bullish on right now. I'm so excited to see this price action. So silver, I'm going to talk about the macro, and then we'll zoom in a little bit, okay? And take, now, you know what? We'll stick to the macro, because I just talked about kind of the shorter term yesterday. So silver did break out of this long-term bull of fragor. I'm Japanese, so I can make that joke. Bull flag right here, parabolic move up, followed by a descending triangle. Very long-term bull flag. I was very confident this would play out as a breakout, obviously, bull flag, bullish pattern, as the name ensues. So, breakout, long-term bull flag way back in December. Since then, I've been bullish on silver, and we're just seeing higher highs and higher lows, to very simply put it. Silver also is kind of in a breakout right now. It did break this long-term line of resistance on the overall downtrend from these highs back in August, and it is currently using that. It's currently been dancing right on top of that, using it as both support and resistance. And I think it's very likely that we just looking at this, you guys, look, high, low, higher high, higher low. What comes next, in my opinion, is probably a higher high. Again, especially if the equity markets do pull back. There's still capital that wants to be, there's still a lot of capital that's going to want to be put to work. And silver is not even close to its all-time high of $50 that it set back in 2011. Gold is near its all-time high that it set only in 2020. And I think silver is just, it's a great inflation hedge. It's objectively, if you dig into it, rarer than gold if you're talking about above ground metals. And silver right now is just, there's so many stars aligning, as I said in the beginning, for silver at this point in time, especially if we see money continue to flow out of cryptocurrencies, another direct inflation hedge like Bitcoin. I think a lot of that capital will flow into silver. Wall Street Bets thing happened, and that brought a lot of attention and eyes to silver and silver miners. So very bullish on SLV, very bullish specifically on my mining play AG. If you guys didn't watch my silver focus video that I posted yesterday, go check that out right before this one. And very bullish on silver. So silver, say we see a nice parabolic move up early March 3rd, I do think it's likely that we do ultimately go on to test this long-term line of resistance that acted as a very significant line of resistance over the course of 2020 since with those March lows once again. And again, Just if we do happen to hit that on March 3rd, just where I drew this price target randomly, silver go parabolic, set new yearly highs at a high of 32.50, okay? If we break above this trend line, we would set new all-time highs, like secure all-time highs past the summer highs. And I think it's very likely, in all honesty, that we use the overall line of resistance on the long-term uptrend. Again, this first top from the March lows, the second high, silver's yearly high back in mid-August, back in early August, I should say, and use this as the ultimate line of resistance for the macro top in silver, okay? So again, this line right here, the sign line, I've had drawn forever. This is silver's previous high way back when, in 2011, a decade ago, at $50, okay? Silver could pretty much 2x from this point and just be floating around its all-time high. Keep in mind, gold is still floating around its all-time high that it just set back in 2020, okay? So silver, I think the stars are just aligning. It's finally silver's time to shine, and I remain bullish on silver as both an asset, but again, as an equity hedge, because I do think that if money does flow out of equities, it will flow into more promising sectors like silver, because again, money, capital still wants to be put to work. There's so many excited traders right now. There's a lot of retail interest, a lot of eyes that have been on silver in recent history, just over the past few weeks. So again, the Wall Street Bets thing, and that makes me bullish on silver, again, as both a play and a hedge to equities, all right? So we'll call it there, you guys. Please let me know what you think about just everything that's going on in the comments down below. Again, I could be wrong. I was just wrong. I was wrong a few times this week already. So keep that in mind, you guys. We're fortunate to be right a lot, but it happens. That's the game. You're wrong sometimes. It's hard to predict, especially when the markets are so emotional. So I do my best for you guys. Again, I apologize if I let some of you down, but trust me, I'm doing my best for you, and my money is always on what I'm saying once again. So I will talk to you guys downstairs in the comments. Always love learning. Always love talking shop with you guys. So I'll see you guys down there. Until next time, always remember, take action, make waves. Peace.